So this is problem PF3-43B in your book. So what we're going to have to do here is use the worksheet and work through some adjustments, some adjusting entries. So the first part of this problem wants us to complete the worksheet and use the letters A through E to label 5 adjustments. So if we click here, we'll get the adjustments. So it's giving us a starting point of the unadjusted trial balance here. And so now we need to match up our adjusting entries here with the adjustments column in our worksheet. So let's start with the first one. As of December 31st, Galaxy had performed $900 of service revenue, but has not yet billed customers. So the key words in here are had performed $900 of service revenue. So this means that the company has completed the work and has earned this $900. So it just has not collected the cash. So what this means is that we are going to have an adjustment. This is letter A here. Of service revenue is going to be a credit. So we're going to increase our service revenue by $900. And since we haven't yet collected the cash, we're going to increase our accounts receivable by $900. Okay, so that's the first one. Next one, at the end of the month, Galaxy had $500 of office supplies remaining. So if we look on our balance sheet here, our unadjusted trial balance, we'll see that our office supply balance is $1,500, and it's telling us that we have $500 left. So what does that mean? It means that we've used $1,500 minus $500. We've used $1,000 of office supplies, because if we started with $1,500, we have $500 left. That means that $1,000 of it got used up during this period. So what we'll have to do is basically reduce our office supplies by 1,000, which is going to involve a credit, since office supplies is an asset, of 1,000. And we're going to have a supplies expense here is going to be a debit of 1,000. Okay, so that's the second one. So letter C, prepaid insurance of $600 remaining. So this is going to be a similar concept. So we had $900 to start with in our unadjusted trial balance. We have $600 left. So that means we used up 900 minus 600 is 300. So if you look here, we have our insurance expense here. It's going to be a debit of 300 since we're adding insurance expense of 300. And now we're reducing our prepaid insurance balance, which is going to be a credit of 300. So notice for all of these, we have a debit and we have a credit, debit, credit, debit, credit. So it's just like doing a journal entry, except we're just arranging them in this adjustments section of this worksheet. So now let's do the depreciation expense of $4,200. So we have our depreciation expense here. This is letter D, $4,200. This is going to be our depreciation expense, and the credit is going to go to our contra asset account accumulated depreciation, $4,200. And then finally we have accrued salary expense of $150 that has not been paid yet. So that means we're going to have to increase our salary expense. So we had $30,000 that's in our unadjusted trial balance. This adjusting entry is wanting us to accrue another $150. So 150, and it has not yet been paid yet, so we have a payable, accounts payable here. Remember, it's a liability, credit normal, so we add that liability here of $1,500. So now, to get our adjusted trial balance, we're simply going to take this section of unadjusted trial balance and this section of adjustments and basically combine them to get this adjusted trial balance. So let's just carry it over. So the first one is cash. There's no adjustment, so it's just the same as our unadjusted trial balance. For accounts receivable, we had 5,700. In our unadjusted, we're adding 900. That's 6,600. Office supplies, we started off with 1,500 debit. We're crediting it 1,000. It's going to leave us with a $500 debit balance. Prepaid insurance started with 900 debit, adjusted a $300 credit. That's going to leave us with $600 debit. Equipment, same, no adjustments. Accumulated depreciation, we had 8,500 to start with. We're adding 4,200, so we get 12,700. And notice here, the debits are going in the correct spot. The credits are going to be in the same column. So just be careful about which column you are transferring things into. Accounts payable. Sorry, I think I messed up here. This should actually be salary payable right here. Okay, so this accounts payable, same. Salaries payable, we have a credit here and nothing in the unadjusted, so we're just going to have $150. Common stock, no adjustment. Dividends, no adjustment. And again, I made sure to put it in the debit column. Sales revenue, we have our original 7,200 from the unadjusted trial balance. We're adding this 900 to get 72,900. Depreciation expense. Supply expense is just our adjustment. Utilities expense is just from the unadjusted trial balance. Salary expense, we have to take this 30,000 and add this 150, so 30,150. And insurance expense, we just have this debit from this adjustment, 300. So now, let's add up our columns. So if we do the math here, let's see. This is 65.50. This is 65.50. Add these up. Okay, so the most basic thing I want to do is to make sure that my debits and credits, the adjustments are equal, and the adjusted trial balance debits and credits are also equal. So let's see if we did this correctly. Okay, so I think we're good. So let's move on. So now it wants us to basically do the journal entries for each of these. So let's just go through here. So we're going to have accounts receivable, service revenue, if you notice, we're basically just transcribing what we did above into journal entries. So this debit of $900 to accounts receivable is this debit, and then this $900 credit to service revenue is right here. So basically just restating the same information in a different place. So So if you notice the options here, cash paid for office supplies, no, because we're not buying the supplies, we're actually accounting for the expense when the supplies were used. To record office supplies purchased on account, no, we're not purchasing office supplies again. And the third one is to record office supplies used. So that's what we're doing. That's why I chose that. Okay. Insurance expense, again, was 300 because it gives us the amount remaining. Remember to keep that in mind. This is not the amount we're expensing. This is just the ending value of the balance. So when we did our math above, it turned out that the actual expense was 300. So okay, no way. Okay, so again, the difference between accrue insurance expense and record insurance expense. Since it's prepaid, it's not an accrual. This is actually to record the insurance expense because again, the cash has already transacted, so we're not accruing it. It's a deferral. So the cash has already transacted. We're now just recording the expense. Okay. And so when you're using these drop downs, make sure for depreciation you're clear about the difference between accumulated depreciation and depreciation expense. Remember, depreciation expense is just like any other expense account. It's debit normal. And accumulated depreciation is our contra asset account, which is credit normal. And the other tricky thing, which is the mistake I made, was sometimes you gotta differentiate between accounts payable, salaries payable, utilities payable. So the book often gives you these different types of payables. So just pay attention and pick the one that's most appropriate. So in the example above, I had chosen accounts payable instead of salaries payable, and it marked me wrong. So just make sure that you're paying attention to the different options that are available. So in this example, we're accruing, right? Because the cash is going to be exchanged after we record this expense. So in this case, it's an accrual. In contrast to this insurance expense where the cash for the insurance is paid up front and then we're recording the expense. In this case, we're taking the expense and the cash will be paid later.